Hello, welcome everyone. Thank you again for joining us today in ADB webinar series on Southeast Asia Aviation. I'm Ida No, ADB Project Officer for the Southeast Asia Aviation Landscape Study. For those who did not attend our webinar yesterday, this is actually the second webinar of the webinar series, which follows a recent ADB publication of landscape study on Southeast Asia aviation industry, COVID-19 impact and post-pandemic strategies, which is funded on the ADB Regional Technical Assistance. ADB approved this technical assistance in December 2021 as a regional technical assistance to carry out the landscape study. A pre-publication version of this landscape study was drafted and initially shared with the stakeholders in September 2022 and discussed with those stakeholders during a virtual seminar that was held in October 2022. And finally, ADB formally published this study in May 2023. So today is the second webinar, which we will look at the rapid recovery over the last year, while yesterday's webinar, we were focusing on the market recovery strategies as recommended in the publication. So as for the agenda today, we will start from the introduction and also an overview from ADB, followed by a presentation by the co-authors and following panel discussion. There will be a Q&A section open to all after this panel discussion, but please feel free to raise questions anytime during the webinar in the Q&A box. We will try to get back to you on it. Lastly, we will conclude the webinar with a few survey questions. So now, without further ado, I would like to invite my colleague, Ms. Chaoren Shim, the ADB Senior Transport Specialist of Southeast Asia Transport and Communications Division, to give us an overview of ADB's role in Timor-Leste's aviation sector. Hi, Chaoren, the floor is yours now.
And thank you, Aidan. Can you hear me?
Yeah.
Okay. Hi, everyone. My name is Chaoren Shim. I'm a Senior Transport Specialist in Southeast Asia Department at the ADB. I'm glad to see the progress made to this very important initiative and nice to meet everybody joined online. In ADB transport sector operation, aviation is not the biggest part, but surely it is a very important subsector. And the most recent loan in air transport is the Dili Airport expansion project in Timor-Leste. And I'd like to talk about it briefly today. We started the project preparation back in January 2020. And to share some vivid memory, one of the team members who was a biologist was in Dili to check marine diversity in February 2020. And that's a time when many of the countries started to close their borders. And he managed to return to his country at the last minute, but everyone would recall how urgent and serious the situation was. Dili Airport, which is the only international airport that, serving the international flight in the country, was soon closed, and the country became completely disconnected to the world. The airport had 3 destinations before COVID, with a runway of 1,850 meters, which was planned to be extended to 2,100 meters by the project, aiming to establish better air connectivity for the country. At the time of loan approval back into 2021, the key industry players projected that we'll be fully recovered by end of 2024. And it appears that the projection won't go wrong. However, we have been noticing that the trajectory of recovery varies across the countries, depending on their network characteristics, physical conditions of the infrastructure, and resources. Going back to the network issue of the Delhi airport, by now, like other Southeast Asian countries, it also recovered its connections and passenger volumes to considerable extent. And it is serving routes to 3 destinations now, namely Denpasar, Darwin, and Guangzhou. And its expansion program is now in full swing. And we are thrilled to see the end result warranting its network expansion. The paper in discussion today covers Timor-Leste, and I hope everyone could enjoy the panel discussion in the following session. I believe it will be an interesting discussion looking at the subject from both airports and airlines perspective in various countries. Okay, I'll stop here and thank you very much for listening and enjoy the rest of the webinar. Over to you, Evan.
Thank you so much, Sharon, for this overview, which I hope help us to understand better of ADB's role in Timor-Leste, as well as Delhi Airport itself. Now I would like to introduce the 2 co-authors of the study, and also who will give our the brief presentation later. So Brendan Sobey and Edward Clayton. So Brendan is a Singapore-based independent aviation analyst and consultant. He has been the author of several studies over the last few years, including aviation studies published by ADB in Central West Asia. Brendan has been working in aviation for more than 25 years, as many of you are aware. Is also a well-known thought leader and media commentator. Edward is the partner at PwC Malaysia, Vietnam, focusing on infrastructure and transport. He's also the PwC's aviation lead in Southeast Asia. He has been working in aviation sector for over 30 years. Now over to you, Brendan and Edward, for the presentation. Thank you.
Thank you, Yida, and thank you for the introduction, and thank you for the presentation on Timor-Leste, a very fascinating market and often forgotten about market in Southeast Asia, but a very important, increasingly important one. The format of this webinar is we'll have about a 15-minute presentation similar to yesterday's webinar, where Edward and I will both co-present a few slides. In this case, we're going to be looking at the most recent recovery data. Yesterday, we looked more at recovery recommendations that came from the study. But because so much has happened in the last few months since we completed the study, we're going to really focus on more forward-looking issues and also the most up-to-date recovery figures. And we have a very esteemed panel where we're going to have some airlines and airports be able to provide some input on the current recovery and the issues that we are now facing in the industry as we try to reach a full recovery and restore growth. And many of these issues you guys are well aware of. They're quite well publicized, but it's great to be able to do kind of a deep dive into where we are at the moment in both the recovery and with the issues facing the industry. This first slide just shows the international passenger traffic at the top 5 international airports in Southeast Asia, which is Singapore, the 2 Bangkok airports, Kuala Lumpur and Manila. And it tracks it from the beginning of 2022, which was before borders reopened, or at least fully reopened. Back then we had maybe a partial reopening through the VTL scheme in Singapore and through the sandbox and other initiatives, but the market was still relatively closed at the beginning of 2022. And as you can see, things really picked up in April 2022 when most borders reopened and restrictions were lifted. And Singapore has been the faster of the recovering airports, as well as the fastest recovering international market in Southeast Asia during this period, having kind of enjoyed a head start with the VTL phase, and also benefiting a lot from being one of the earlier movers in Asia as a hub. So taking advantage of hub traffic that would have normally gone to North Asian hubs, and that really helps Singapore's positioning. CK can talk about this later. And as you can see, the 2 Bangkok airports, particularly initially, but even now, so Dam Muang is more behind than Suvarnabhumi. This kind of shows that long-haul traffic's been recovering faster than regional traffic, because Damawang in Bangkok is more of a regional play, particularly with those low-cost carriers. And there's also been a bit of a shift in some airlines from Damawang to Suvarnabhumi, with AirAsia, for example, now operating from both airports, and Thai Vietjet, an LCC actually based at Suvarnabhumi rather than Damawang, and they're one of the faster growing airlines in the region. So that explains the faster Suvarnabhumi over Damawang recovery. And there's a line here that's showing the overall Bangkok recovery is pretty much average, once you factor in both airports together. And then Manila has actually been the second fastest recovering airport. In fact, a few months, Manila has even been higher than Changi. Manila was also an early mover and really taking advantage of worker traffic, which is really an essential, fast recovering segment of the market. And the overseas Filipino worker segment is a very big segment in Manila. So a very different passenger profile than, say, Singapore. And Kuala Lumpur and the Malaysian market has been lagging behind most of the other markets in Southeast Asia. We can talk about this more with Chandran from Boutique Air Malaysia and Lion Group later about why maybe Malaysia has been a bit slower than some of the other Southeast Asian markets. But overall, right now it's close to 80%. And if you look at April, in terms of the overall Southeast Asian international market, with Changi above 80%, and the other airports getting close to the 80% mark as well. Next slide, please. And this shows the capacity by country. As you can see, we have 11 countries in Southeast Asia, including Timor-Leste, which is the smallest one. It's ranked by in order of size. So for international, Thailand's the largest, then Singapore, and Timor-Leste, obviously the smallest one. And this is based on quarters, so it shows how the recovery has kind of transpired since the beginning of last year. Again, very small numbers we saw the first quarter of last year because most borders didn't reopen until April, but then really picked up last year, and now overall we're at about 76% in the current quarter, and for domestic, which is the one on the right here, we're at about 87%. But it does vary a lot by market. Like domestic, some of the markets like Vietnam are well over 100%. Philippines is also about 100% recovered in terms of domestic. But other markets like Malaysia and Thailand is a bit behind, not fully recovered domestically. Indonesia as well. Again, we can talk about this why this is during the panel. Some of the smaller domestic markets, like Cambodia. Cambodia is a very small domestic market, relies on international tourists flying between Phnom Penh and Siem Reap rather than local travelers, and that's because it relies on the international kind of traveler. It's not really an essential and a very small market. That's why it's recovered very slowly. But in terms of international, again, Singapore is one of the faster ones, and actually Vietnam, and from a market perspective, is about the same as Singapore now. It's going to be higher than Singapore in the next quarter, but Singapore's still up there, and Thailand is also rapidly catching up, as well as Indonesia and the Philippines in terms of international recovery rates above 80% by next quarter. Next slide, please. I'm not going to hand over to Edward to kind of talk about some of the regional variation in terms of the different regions and how the recovery has been uneven from that perspective.
Yeah, thanks very much, Brendan. So we've been looking at June 2019 versus current month in terms of seat capacity, and you see some big variance in travel out of Southeast Asia. So North America, interestingly and perhaps surprisingly, is pretty much back to where it was pre-COVID. Middle East and South Asia also very close, as well as Southwest Pacific. Europe lagging a little bit in terms of recovery, and Africa also significantly behind, although to be honest, there's not a lot of traffic out of Africa anyway. The big gap is Northeast Asia, and you can look on the right-hand side of recovery of markets. So People's Republic of China is only 43% recovered, as of June. So lagging significantly behind, but we know that they really only reopened significantly around 3 months ago. And so what we observed in other markets is that after the reopening takes place, it does take time for airlines to put back capacity and for travelers to actually start planning to travel again. Hong Kong, similarly, although a lot of that obviously is China traffic through Hong Kong, and Korea, Japan, outbound also down a bit at the moment. And then finally, within Southeast Asia, still only at about 84% between markets. So quite a mixed picture, but essentially long haul and medium long haul like Southeast Asia seems to be on the whole doing better than the immediate East and Southeast Asia. Okay, Brendan, back to you for the next slide.
Yeah, so the next slide, we're looking at airline capacity recovery for the top 30 international carriers and the top 20 domestic carriers in Southeast Asia. So this just looks at the Southeast Asian airline sector, and we were talking about the Southeast Asian airline sector in yesterday's webinar as well. These are the main players, that account for about 90% of the market here in Southeast Asia. And this is looking at individual airlines rather than groups. So a lot of these airlines are part of or affiliated with larger groups. The overall recovery for this pool of international airlines is 79% this month in terms of capacity this month compared to June of 2019, and for domestic it's 95%. The ones with the highest recovery are somewhat of anomalies in that they had very small operations or were very new in 2019. Batik Air in Indonesia, for example, had a lot of was mostly domestic, but has brought in a lot of international operations from a low base, taking over some international flights from their sister airline Lion Air. Thai Line was very small back in 2019 with just a few aircraft, and Myanmar Airways International also has a very high recovery rate. They were also much smaller back in 2019. They had benefited from the fact that even though Myanmar's market is the slowest to recover overall, most of the foreign airlines haven't gone back into Myanmar because of the political issues. So. And they have benefited from much higher market share, carrying the local population, the worker traffic, and so forth. And Firefly as well, they've added jets, a jet operation, which explains their kind of higher than average rate. It's basically, if you look at the ones on the left, those are the largest ones. So Singapore Airlines is the largest international airline in Southeast Asia. And Singapore Airlines recovery rate is about average now. It's about 80%. They were tracking well above average for several months because they were one of the first ones to restore capacity, but now they're close to average. And the second largest airline is AirAsia, the Malaysia affiliate. They're at 82%. And the third one is Scoot, also from the Singapore Airlines group, and they're actually more than fully recovered at 111%. So there's quite a variation of recovery rates depending on the airline, but you can see the overall trend is quite positive with the market at 80% recovered. And then for domestic, also quite a lot of variation. Lion Air being the largest airline by quite some margin in the domestic market, being the market leader in the largest domestic market in Southeast Asia, Indonesia. They're about 95% recovered right now. And then you have the two Vietnamese carriers, which have grown as the domestic market in Vietnam has grown overall at over 100% recovery rates, Vietnam Airlines and Vietjet. So it's overall showing a lot of airlines are actually fully recovered, which is a good sign. And as we get more into the second half of this year, we'll see more and more airlines cross that 100% mark. Over to Edward for the next slide.
Yeah, thanks, Brendan. And I think what we've seen from the previous couple of slides also is some switching of traffic between domestic and international when international routes were a bit closed and airlines are using capacity on domestic. As international routes have reopened, then we've seen a bit of move of capacity. So still a very, very dynamic situation. Now, in terms of actually making money, what we're seeing is that quite a few airlines have actually become more profitable than pre-COVID, despite the lack of traffic, despite the high fuel prices. They've managed to really recover revenues. So you'll see, for example, Singapore Airlines, they've got 111% revenue recovery off 86% passenger recovery. So what does that tell you? It tells you that people are paying a lot more in terms of airfares, and you see their operating profit recovery very, very healthy indeed. So generally, very good news. I mean, Thai is a bit outstanding because they actually had a negative margin Q1 2019, negative 2%. So obviously that's a huge improvement. Similarly, Philippine Airlines. So on the whole, most of the airlines actually doing quite healthily. Three which are perhaps still struggling are Cebu Pacific, Vietjet, and Vietnam Airlines. All of those are very strong in domestic markets, and it's been much, much harder to push up fares on domestic routes than it has been on international routes. So, you know, if you're highly domestically focused, then that has been a bit of a challenge, and could perhaps explain why domestic recovery seems to have flattened as airlines are seeing more opportunities to make high fares on international routes. So on the next slide, just from an air connectivity perspective, so this is a new airport connectivity index, which is emerging from work that we've been doing with Airports Council International, as well as us together in this team. And so we're looking at you know, how have airports shifted in terms of connectivity. And connectivity isn't just number of passengers; it's also where they fly, frequencies, quality of the destination that you fly to. So Changi, Southeast Asia, was number one in 2019, remained number one in 2022, and is still number one now, indisputably. But we've seen some other moves. So Bangkok, number two, but went down in 2022. Similarly, Kuala Lumpur, number three, but was down significantly a year ago. Opposite thing we're seeing in Vietnam. So Ho Chi Minh City up significantly. Jakarta down because a lot of the flying there has been really focused on domestic. Dom Muang also now recovering, and that slightly contrasts with the first slide that Brendan showed you, because that slide ran up to last quarter. What we're looking at here is the forward seat schedules for August 23. So what we're seeing is that a lot of the China traffic recovery for Thailand is actually going into Dom Muang rather than Suvarnabhumi, interestingly. So not quite what we perhaps expected. And then some of the smaller airports as well, getting recovery either up or down. So places like Penang, Kota Kinabalu, improving their connectivity. Vientiane down a bit. I went there recently and found that the non-stop flight from Malaysia didn't exist anymore. So you know, I certainly felt that. And Dili right down at the bottom as a very, very small airport. So that just gives you a very broad perspective on connectivity. The central part of the chart is actually specifically focusing on China. And you can see there, for example, Dom Muang is minus 40%, whereas Suvarnabhumi is minus 63%. So that's, you know, what we're saying is that the China traffic seems to be recovering faster in Dom Muang. And we're also seeing that some of the regional airports are really not yet recovering from China. So the China recovery is actually quite focused on larger airports in Southeast Asia rather than being equal across the board. Okay, so some interesting things there, but you know, I'd emphasize this market is very, very dynamic. We expect this picture to be changing, you know, pretty much every month through the remainder of this year. Let's move on to the next slide. Okay, so the final one I'm going to be talking to, I'll be handing over to Brendan after this, is just the fleet recovery rate. So number of aircraft in service. You can see January 22, only about 2/3 of the aircraft were actually commissioned in service by June, so this month, 85%, but it's actually flattened out a bit over the past few months. So airlines taking their time to put their last few aircraft back into service. And indeed, you still do see when you fly aircraft parked on the sidelines of airports awaiting a reinstatement into recovery. So I think there's a combination of things here. Airlines are talking a lot about, you know, difficulty obtaining spare parts, difficulty finding the qualified engineers to actually do the work, difficulty in finding hangar capacity, So a large number of reasons for perhaps deferring bringing back some of the aircraft into service. So Brendan, over to you. I think you're going to have a few words on this slide as well before we continue.
Yeah, so I mean, at the moment, there's about 250 aircraft grounded in Southeast Asia, and some airlines still have quite a large number of aircraft to reactivate, even though we're 15 months into this recovery. And certainly, if you had asked them 15 months ago whether they'd still have grounded aircraft now, I think most of them would say no. Most of them were planning to reactivate their aircraft earlier, but they've run into issues with getting parts, with getting maintenance slots, and also financial issues in some cases as well, where they just maybe lack the funds to pay for the parts and get the aircraft maintained. And also, and we pointed out even in this study how the last aircraft are the most difficult. So naturally, as airlines were reactivating aircraft at the beginning of the recovery phase, they were taking the easiest aircraft first, the ones that were not cannibalized, the ones that needed the least work, and that left the most difficult aircraft at the back of the queue, aircraft that were cannibalized. And some of these aircraft, I think will never come back. They're actually to the point in terms of their condition, in terms of their amount of parts that they have lost and so forth, they might actually be written off. But that decision hasn't been made yet, and it's obviously something that has to be done with the owners or the leasing companies as well. Another thing to point out is that the 85% is basically active fleet, so that includes aircraft that have been delivered would still be part of that, and of course an aircraft that have been permanently retired, scrapped and sent outside the region, and some airlines did restructure their fleets and return aircraft. That's reflects the lower number as well, because I think we've had more retirements than deliveries. Some airline groups like AirAsia haven't even resumed deliveries yet. A few have, of course, Singapore Airlines, Lion Group are among those, Cebu Pacific, that have resumed deliveries. However, these deliveries are happening at a lot slower pace than they wanted due to the supply chain and delivery issues. So that also impacts these figures. And we're going to be talking a lot about the supply chain issues later on, as well as the manpower constraints, which also in some cases has slowed down or had an impact on aircraft as well as capacity restoration, because if you can't if you can't add flights to airports because of ground handling or manpower issues, if you can't bring back pilots or hire pilots or technicians, then of course you can't expand your fleet anyway, because you don't have the manpower to do so. So this is all related to the kind of slower than expected kind of restoration of the fleet, and how this last 10-15% could actually be the most challenging part of the crisis. In my opinion, this last mile, so to speak, will be the most difficult, just because of some of the issues I've mentioned. But we'll be able to discuss this in the panel now. Just next slide, please. We're going to be able to introduce the panel and some of the topics. First of all, I'd like to introduce the panel. First, we have Datuk Chanjan Ramamurthy. He's the Lion Group Group Strategy Director. And until a couple of years ago, he was also the CEO of what is now Batik Air Malaysia, what a lot of people know it as Malindo Airways still. But Chandran has been working in the Lion Group for, well, as long as I've been in this region, which is like 15 years. So I think he's been around quite a long time. And it's great to have somebody from Lion Group, and particularly Chandran, join us, because Lion Group is one of the two largest operators in Southeast Asia in terms of market share, in terms of the number of aircraft, and in terms of the number of passengers carried pre-COVID. So it's a massive group and a very important, operating in not only in Malaysia, where Chandran's based, but also the market leader in Indonesia, and also has sizable presence in Thailand. Thanks for joining, Chandran. And in this second airline we have on this panel from Thai Airways, the CEO advisor, Otto Gergi. Otto, I've known for many years. He's worked in Singapore a few times and at various airlines and suppliers. He's relatively new to Thai Airways, but not new to the region. And he's going to be able to speak to Thai Airways recovery, which is providing more of a flag carrier perspective, also an airline that had quite a big restructuring during the pandemic. And finally, CK Lim, he's the EVP Air Hub and Cargo Development. from Changi Airport. So to provide the airport perspective, and of course, as I was talking, Changi Airport has had the fastest recovery among the major airports, and Singapore has been the fastest recovering international market. So it's good always to have the Changi and Singapore perspective. As you can see, we have a lot of topics to cover in parallel with some of the slides we just were presenting on, looking at the recovery of different markets, and of course the financial recovery as well as the traffic recovery, the current environment, and then finally we have the manpower and MRO fleet issues, supply chain issues that we were just talking about at the end. So Edward and I are going to be asking questions, but we're also going to be taking questions from the audience. So there is a Q&A box, and maybe already have a couple questions in there. Please type in the questions, and about halfway through this panel discussion, we have about 50 minutes. We will start taking some questions from the audience as well. So we're not going to be taking verbal questions, so just please type your questions in on the Q&A box. First of all, I'll start with the first question before handing back to Edward. Just talking about the overall recovery. I was mentioning internationally, we're at 80% or almost 80%. And I wanted to get Chandran and Otto and CK's perspective on where each of you guys were in terms of the recovery, and when do you expect to maybe reach 100%. I'll start with Chandran. I think Batik Air Malaysia is pretty much at 100% in the international market, but some of the other airlines like Thai Line are not quite there yet. They're quite behind. What are you thinking, or what are you expecting in terms of the international recovery right now? Where are you guys tracking?
Thanks, Brandon. Thanks for having me here on this in this webinar. Yeah, in 2022 we closed the year almost touching about 40 million passenger flown for the whole group, and that's about 78% increase from the year before. Of course, 2021, no question, because almost close, but then we did have some traffic. I don't know whether will we reach 100% or not, but right now we are almost at Indonesia, like you said, 95% in domestic. Malaysia almost 100%. Thailand, we are getting there. But then the focus moving forward would be more sustainable operation, as well as targeting to continue the profitability record. That's what I would look at. 100% or not, maybe in a couple of years we should reach even more than that.
Thank you, Chandran. So for the 40 million, by the way, that includes Super Airjet?
No, that's not included.
Not included. Okay, so
excluding.
Sorry, I had to ask because a lot of people wonder. It's kind of affiliated, but not technically part of Line Group. So once you add in Super Airjet, you're actually more closer or even fully recovered. But without Super Airjet, you're still a little bit behind, probably.
Yeah.
Thanks for that clarification. And Otto, where is Thai Airways? I know Thai Airways is one of the certainly one of the ones that's behind the overall average. Where are you guys in recovery, and where do you think you'll be over the next few months?
We're together with Thai Smile, we're in the low 80s as far as recovery goes. If we look at our international operations, our wide body operations, which is Thai Airways International, we're tracking towards the 60% mark. But as you saw, these profits margins that we have come from a very massive restructure that we've undertaken. Now that means that we have less capacity, less air. Issue, but we're in the phase of procuring more aircraft and growing, and we're growing month on month, taking 11 new aircraft between now and the start of next year. So we see it coming back very, very strongly, and we have been able to change the settings, as you saw from our results, to maximize the returns on what we are flying, as opposed to past years. So it's very, very hard, to use Thai Airways to see if it's a true recovery in the region based on our capacity and what we have available. But what we do see is that it's coming back very, very strongly. So our 60% recovery rate is probably not true, not the best way to view it. But if you look at our domestic, 83%, Suvarnabhumi or Bangkok is at 70% in April, as far as airport numbers go. So that's how we see the recovery, and that doesn't include China, which is maybe a topic for later.
Okay, and then CK, I mean, obviously, Chengi's April figures, I think, were 83%, and probably continue to inch up a little bit over the summer months with the peak season and China recovering. Where do you see Chengi's recovery going? And a lot of people are asking about the 100% and how long that might take, because that last 10% might be the most challenging.
Yep. Thanks, Brandon. I think about currently as we speak, about May and early June, we're tracking to close to 90% recovery. So expect 100% sometime next year, within 2024. But like you said, if you look at either the airline angle and B, from the market's angle, I think some airlines, their fleets are below where they were at pre-COVID. So if those our key partners, they are not putting back all their flights, some other airlines will have to do more than 100%. So likewise for markets, I think I don't see China getting back 100% next year. So some other markets will do more than 100%. So the last part, the last mile, the last 10% might not be so linear as the previous record. I mean, the previous recovery that we have seen over the last 15 months. I think the last part may take some time to get back 100. So we are just watching this closely.
Yeah, that makes sense. I mean, you need basically markets to fill the void left by others, which is India or other South Korea, other growth markets, to fill the void left by China that's not fully recovered, and others that are not fully recovered. So it's a shifting kind of thing. I'm going to hand it over to Edward now for the next question.
Yeah. So and certainly I think 2019 now, which is what we sort of see as the base year, is quite some time ago, 4 years ago. And so you would have expected some shift in the markets over 4 years anyway. So I guess it's going to be very interesting to see how that changes now. So we've just been talking about international, Brendan's question, but now I'm going to shift towards domestic. And obviously Chinkiat won't have a lot to say on that. But Chandran, you are strong in both Indonesia and Malaysia in terms of domestic. Just can you give us a feeling about what you're seeing in those markets, what the dynamics are, what's the same and what's different perhaps between now and pre-COVID?
Yeah, thanks, Edwin. Yeah, Indonesia, if you look at Indonesia itself, geographically, it's more focused on air travel, right? Likewise, Lion Air is capturing that advantage by focusing more on domestic. Whereas Batik Indonesia it's branching out to international destinations. So the focus is Lion Air, domestic area, Batik Air, Indonesia towards internationals. That's Indonesian market. Huge domestic travel, partially owing to the geographic of the island itself. From Sumatra to go to East Indonesia, it's about 5,200 kilometers, bigger than the US land size. So like it or not, you need air travel there. So that's a given. In Thailand, huge domestic populations, about 78 to 80 million populations. That's give good traffic to Thai Lion Air. Malaysia, relatively a smaller market because the population is about 30 plus million people. But then the only or the market that we see here is dumping of fares. It's quite rampant here. You will see the fares on e-hailing from downtown Kuala Lumpur to KLIA at about $15, for example, and you see the fares from KL to Penang is about $10. So I don't know how sometimes airlines here are pricing themselves, or is it economically viable? I'm not sure. I mean, at that price, you can't even pay for the fuel, right? So Malaysia, the domestic market is huge because it's shared by 4 or 5 airlines. But then I think fares are mainly is unsustainable fares, I would say.
Okay, so interesting dynamics in the Malaysian market, but you're saying that the other ones are tracking okay. There was actually a question that popped up in the Q&A, so maybe I'll just put that to you while we've got you on the screen, so to speak. Someone asking about safety post-COVID and whether airlines being financially strapped are facing any safety challenges. So,
I mean, the records are getting better. As you can see, we don't have much problem, but again, I must also stress that the operating environment in some of the airports that we operate are not as good as Changi, for an example, right? So that may pose challenge in the past, but that's not a so-called an excuse for us to keep giving that a reason. We don't see any much issues since the last 3 years. The record has been excellent.
Yeah, no, I'm certainly not aware of any significant instance in recent years.
To add more, also, Edward, all our airlines are IOSA, IATA safety accredited airlines. So we strictly follow the IOSA standards, and all our airlines have been renewed as an IOSA recently. Into the registry. So to that fact, I think that says that we are serious in our safety, as well as the business as a whole.
Yeah, indeed. The only incident I recall in recent years was a Korean airline having a runway excursion in Cebu, which not a Southeast Asian airline at all. So with that, maybe shifting to Northeast Asia, Brendan, back to you.
Yeah, thanks, Edward. Our next question is going to look at Japan specifically, and then we're going to look at some of the other North Asian markets, since there's some of the slower recovering and more interesting and highly talked about markets, I would say. For Japan, it's Thailand and Singapore, really major source markets, particularly Thailand. So I'll start with Otto from Thai Airways. For Japan. The recovery for Southeast Asia, Japan is only a little over 70% right now, which again is lagging a lot of the other markets. Japan's been open for quite some time, and everybody's been talking about how outbound Japan demand is still quite weak. Japan's a very popular destination from an inbound basis, but most of the traffic traditionally for Southeast Asia has been the Japanese traveling around Southeast Asia. So I was wondering, Otto, what you're seeing right now in terms of the outbound Japan market and how that's affected Thai Airways, and when do you think you can fully restore your capacity in Japan?
Yeah, Japan has been very slow. So it's even though it's been open, unlike China, which makes it surprising, but it's so slow. But then again, the Japanese do like to plan much in advance. And if we remember during COVID, the restrictions in Japan were recommendations, for the population to undertake. It wasn't like in Singapore or China where there was such thing as a lockdown. So I think the Japanese have been very much more restrained in their travel activity, although the place has been opened and they have self-imposed restrictions, so to speak. So I don't know. I think probably this winter of the northern wind in Q3 and Q4. Q3 and Q4, the forward bookings being or starting to come back from Japan, but it has been much slower than from everywhere else.
Okay, thanks, Sato. Do you mind turning off your camera? Not because we don't want to look at you, but because your
I
connection,
understand.
your
Yeah.
connection has actually been quite bad, and you keep on cutting out. So I think by doing that, we might
Yep.
get more
Understand.
voice from you. Thank you. I'm going to go to CK now about the Japan question. What have you been seeing in Singapore? Have you been affected by this kind of weaker outbound market?
Overall, our Japan numbers, I was looking at the May numbers, is tracking close to the overall Changi recovery. So like high 80s, 90s around that. So overall for Japan traffic, it is in line with the overall recovery. But I think you drill down below, the composition will be different. I haven't looked at the latest tourism numbers. I think the inbound from Japan, like you pointed out, is probably hovering like 50% or lower. So it's all pushed by outbound. Outbound from Singapore to Japan is disproportionate. I think anecdotally, if we just talk to everybody, end of the year, I think I'll see a lot of my friends in Japan when I go there for vacation. And the fares are indicatively quite high for Japan. I think it might be like that for now because both coupled by the strength of the Japanese yen versus the Singapore dollar, as well as what has been talked about. Certain more conservative attitude towards traveling. So it might take some time to get back.
Yeah, Singaporeans do like going to Japan, and
Yeah.
I think and the Zip Air entry and the Scoot also operating nonstop flights now to Japan have helped that market, kind of the lower end market. But you have the inbound and other transit segments might be a bit different behaving. Over to Edward for the next question.
Sure. Okay, so we're kind of doing a round robin of Northeast Asian countries. So focusing on China, and I think everybody was expecting that we'd get sort of mass tourism from China back once the borders reopen. But so far it's been a bit slow. And therefore we saw, the market is like 43% recovered, Southeast Asia, China at the moment. Although also, as we showed, some noticeable differences between different types of destination airport within Southeast Asia. So what is it that you're actually seeing? And I guess, CK, Otto, and Chandran, look for a comment from all three of you on that. And why do you think it is that the secondary Southeast Asian destinations are recovering much more slowly than the primary ones for the China market? So maybe we'll kick off with, okay, Chandran, thanks.
Yeah, China traffic has been, well, it's coming, but it's a bit, like you said, it's slow. But I think the real result will be seen between the school holidays in July and August in coming months. Then we can really be judgmental about it, whether are we seeing the traffic out of China or not. But for now, given that our traffics, our routes are limited, we only have flights to Guangzhou and Haikou, and then we are starting flights to Chengdu and Zhengzhou in late June, early July. Then I should be able to see whether the traffic are picking up. Like Japan, China also not that encouraging, but we hope to see these numbers going up in coming months.
Mm-hmm. Thanks very much. Otto?
I think China, the recovery or the opening up was so very sudden that didn't allow to have capacity plan to go back in. And also we are seeing challenges around, not just for capacity, but on the ground as far as services go, coming back fast enough to be able to turn aircraft around, check people in, all the usual ground service things. So, and then we hear anecdotally about passports, people not having passports, having to wait a long time for passports. Chinese also require a visa to travel to many places, less so in Southeast Asia, but in others. So airlines have been wary about putting capacity back in if there's only inbound traffic or there's no outbound traffic. So it has been, I think everybody was caught on the back foot with this one, with China. And I think we'll see it rebound in Q3 and Q4, just like we hope Japan will.
Thanks. And CK?
Yep. I think for China, perhaps if you break it down into the various segments, I think the recovery rate is quite different. I think the group tours is one noticeable. The pure leisure segment and the group tours is, I think, one area that I think is absent. I think that maybe, I'm looking at your numbers earlier, maybe that explains why for the secondary cities, like some of the beach destinations and all that, is taking longer time to recover. I think the VFR, definitely the visiting friends and relatives, is the one that is ahead. And there's both directions. For Singapore, there are people here who have relatives in China and people who are working in China and not back for a while. So I think VFR is a strong segment. We have also seen business and conferences being quite strong. So we have seen a lot of business groups, provincial government study groups and all that coming back first before the group tour. So I think for the cities and destinations that have different segments of traffic, I think the recovery may be faster. If you're just counting on one pure leisure segment, you'll be slow. But I think back to Chandran's point, I think it's encouraging to see within China, domestic travel, right? In May, in Labor Day was very strong. It's more than 100%. So it means it's coming back. Slowly and surely it's coming back. So we are all looking at this summer, come July, where the summer holidays start. I think that is the key test. But the internal signals, and from talking to some of the Chinese airlines, seems to be they're quite optimistic for summer. Let's see how that turns out.
Yeah, it's a very interesting, different segments recovering in different ways. It'd be interesting to see how they pan out over the next year or so. Brendan, back to you.
Yeah, thanks, Edward. And that's some really great observations on China. I tend to agree with. I think it is the markets that rely heavily on group travel that have a lot of like low frequency routes to secondary cities in China, which those low frequency group travel charter kind of routes haven't resumed yet for obvious reasons. We're going to just do one more North Asian market, and that's Korea, which is a much better story, a good news story, I think, for everyone. In that Korea has rebounded very nicely with outbound Korea traffic into Southeast Asia, being quite strong for some time, actually. One of the first markets to recover and one of the stronger markets to recover overall, not just from a North Asian perspective, but overall. So I will start with Otto, because again, Thailand is a big market for South Korea. Are you fully back up in Korea, and have you noticed really strong demand for Korea?
We're almost fully back up, and the demand to Korea has been great. Surprisingly, this is what we would have expected from Japan as well, but it's completely different. So demand from Korea, especially individual travel, especially to Bangkok, has been very, very strong. And our forward bookings and our capacity planning is reflective of that as well.
Okay, and CK, I mean, Korea was, I think, the first or one of the first markets from Singapore that was fully recovered. Why was that, and how is it doing now?
Thanks. I think while today's conference we focus on COVID, actually there were quite a few other key trends that were happening as well. I think for Singapore, Korea, we actually have both sides liberalized our air traffic air services agreement in 2019, but it was too short. I think it was too short for it to take effect. And some airlines, like I think Jeju Air started in 2019, then COVID hit, so that disrupted the trend. So in the run up to 2019, I think there was already pent up demand from Korea Singapore side that was constrained by the air services agreement. So now, together with the emergence from COVID, is also harnessing the pent up from a few years ago, and then that catches up. So I think Singapore Korea traffic more than recovered beyond 2019 kind of level. So it's both directions. You have Singaporeans liking to go to Korea and Korea coming. So we think we are quite optimistic about that market. It's quite a good trends. Yeah.
Yeah, and Chandran, Batik Air Malaysia is actually launching Seoul later this month. This is the first time Batik Air Malaysia has gone into Korea. Why now, and how is that route looking in the pre-booking kind of pre-launch phase?
Yeah, like you all, I mean, said, the demand from Korea is encouraging, very good. Why now? I mean, if you look at Batik Air Malaysia, our objective is to go as many international destinations as we can. we get a good feed of Indonesians from our Indonesian partners, Batik Indonesia, and Super Agile and Lion Air, right, from the group, feeding into KLIA. I'm sure Chinkiat will get a little bit jealous here. So, and then from here, we take up the passenger up to, South Asia and North Asia, East Asia. So Korea, it's fitting well because we are using the Boeing MAX 8 aircraft. The range is perfectly fit into the network. As such, we have mounted in service to Incheon late this month. The forward load is like what Otto said. It's good. We already see 50% load factor for July and August. I think echoing a bit to what CK just mentioned, Korea in this part of the world, partly due to the Korean culture export, such as their food, music, TV series. Now everyone crazy about Korea, right? So that sees good traffic between our part of the world to Korea. Likewise, Koreans also like to come here. And we also have huge South Asians in Korea. That you also see that traffic from Kathmandu to Korea via Kuala Lumpur, and also Bangladesh to Korea via Kuala Lumpur. Yeah, so Korea market looks very good for us.
Okay. And just while we have you, Chandran, there was a question from the audience. They seem to have a question specifically for you. This is with what you said about the Malaysian market and the price wars and the domestic competition. How do you navigate this part and not get sucked in? What does it mean for the sustainability of the post-pandemic recovery of carriers in Malaysia?
Yeah, we cannot do point to point and do depending on point-to-point market and just dump the fares. That's won't work. End of the day, it's a lose-lose game, right? So right now, today we see our Peninsular Malaysia traffic is 50% contributed by the network traffic, including the interline and code shares. So that we are diverting a bit slowly from competing directly to the price wars towards the partners, right, including our Indonesian partners as well as the interline and code shares. That's one. Sustainability it's more to how disciplined you are in terms of your cost management. Being in a large group, we are blessed with cheaper leases. Maintenance is easy because we have a huge MRO center in Batam, so we all tag along with that MRO facilities, as well as buying spares in a huge what you call quantities. I'm sure you know the economics, right? Discounts and so on. So in that context, I think cost management, it's how we can be able to sustain in the future.
Yeah, I mean, I'm just curious. Like pre-COVID, were you also at 50% in terms of connecting and partnership traffic, or was it much lower?
Much lower, Brendan, because we focusing on this since after COVID, pushing more on the network traffic rather than point to point.
Yeah, that's quite an interesting adjustment in strategy. I mean, I know some of it was happening before COVID, but to get it up to 50% is quite high. I'm going to hand it back over to Edward now.
Yeah, thanks very much. So just on Korea briefly, I was in Kinabalu earlier this week, and the local newspapers there were full of headlines around floods of Korean tourists coming in. Dr. Chandran, I noticed that you're not yet flying Kota Kinabalu Seoul, but perhaps that's something you should be considering. At the moment, it's a complete monopoly of inbound Korean carriers coming in from Incheon on the overnight flights. But moving on, India. So we're kind of sort of tracking around to the west of Southeast Asia now. Everyone talking about India and a big growth market of the next decade for Southeast Asians. If you joined yesterday's webinar, you'll see that we showed that India is actually a tiny part of the Southeast Asian market compared to the actual intra-Southeast Asian and the East and Northeast Asian markets. So looking for that for future growth, because it looks like the East Asian markets, probably the very rapid growth is going to dampen down, and we're just going to see normal levels moving forward. So I think both to Otto and to CK, you've both got a big presence in India. Do you think these expectations are realistic? And is there anything that's actually standing in the way of the market developing as we believe it should be able to?
I think
Otto.
it's very hard to know if these expectations are realistic, because they do sound like a lot, and we've been hearing about that, that India will be, as big as China for a number of years. Not with having said that, we are seeing an extremely strong inbound market from India to Thailand, and at the same time, we're also carrying a lot of passengers to destinations in Asia and Australia. So India is very strong. Secondary cities, I think there must be and there will be, growth potential. Exactly how big that is very, very hard to ascertain, or we find it difficult to see if it will be as big as people say.
Yeah, thanks. And Chandran?
Yeah, India, it's a market. I mean, if I may say, it's the market that always after I mean, if I say low fare, I think it won't be fair for the Indians, right? So they are good for bargain hunters. So as such, we see the traffic has really picked up recently, and we see that forward booking from India also quite good, especially, typically Indians from India via Kuala Lumpur, they're up to Bali, right? And also to Australia, as well as our domestic destinations, Penang and Langkawi. So that's quite strong for us at the moment.
Okay, thanks. So you're going to be offering Indians a chance to fly the 737 from India via Kuala Lumpur and Perth to Auckland. Coming up soon.
Yep.
That's truly designed for bargain hunters, I'm sure. And yeah, and I think you mentioned the secondary cities, and I guess the thing about both China and India is that the secondary cities in those countries are as big as the primary cities in many parts of Southeast Asia, so not to be ignored. Okay, Brendan, back to you.
Yeah, thanks, Edward. We've been doing a lot of network questions. I mean, we can continue for the rest of the time on that, but because there's other markets to potentially cover. But I think let's focus on some of the other issues in our last 20 minutes or so here. So I mean, we're talking about so the other issues being the financial recovery, and then also the manpower issues and some of the supply chain issues. So first with the financial recovery, just wanted to ask Chandran and Atto, being representing the two airlines, where you guys are in the financial recovery. I know both of you guys are profitable now, and whether you think this is sustainable in terms of the level of profitability you're now enjoying, or do you see challenges ahead as and if the current high airfare environment is going to end, or if you think that this high airfare environment basically is going to stay for several more months and you can enjoy what you've been enjoying for quite a long time. So we'll start with Otto, and since Thai Airways actually has been singled out as one of the most profitable airlines in the first quarter from a operating margin perspective globally, which was quite an achievement.
Well, I don't think the current levels of profitability will always be with us, but at the same time, I don't see any challenges. I think with prudent management, we should be able to maintain a very healthy level of profitability moving forward. So even though there will be additional capacity, additional competition, I think if we continue and we don't deviate moving forward, we'll be able to have healthy profit margins. Probably not as excessive as we've been having, but still very, very good conditions moving forward. That's what we foresee.
Okay, and Chandran, I particularly Malaysia, which I think you've led since the launch. Actually, you've been there since the beginning. I believe I saw somewhere that last year, 2022, might have been your first year, the only year or first year that you were profitable. And how is that? How's that? How did you achieve that? And how are things looking this year? And do you see continuing the rest of this year, or are you starting to see those headwinds? Because you were talking about these $5 fares to Penang and $0 fares to Bangkok earlier.
Yeah, last year was good, 2022. In fact, I must say first half of this year, it's also still good. Given that we are very cost disciplined airline, I think we should be able to achieve this on a longer term continuity in the longer term. Yeah, we hope to see the fares are behaving in a nicer way than it is today in the domestic as well as regional Southeast Asia routes. But our focus, if you look at what we're doing, we are not only flying 2 hours or 3 hours range, right? We are flying up to 7 hours range. So I think the chances of we maintaining the profitability, it's greater as compared to the years before.
Yeah. Okay. And CK on profitability, I did notice that Changi Airport was profitable again in the March quarter, the fiscal year ending March, which was recently announced. So you guys are back in profitability too. But a lot of airports, are still not profitable or have lower profit margins than pre-COVID, while airlines are generally have higher profit margins. So it's kind of a reversal. I mean, do you have any thoughts on that? And you think that this will last, or do you think airport profitability will kind of improve over time as well?
Yeah, I think for airport there are a few issues. I think number one is that the fixed costs will start coming in. You open for us, we have several terminals. During COVID, we were operating basically 2, but during the last 15 months, 24 months, once you open up one new terminal, the fixed costs start getting incurred before the revenue comes in. So that's one part. And the second part is, I think our retailers, whether were they ready with all the stocks and manpower and all that, I think they take some time for them to get ready. But moving forward, now that the traffic is all more on a steady trajectory, I think Changi and all other airports, you will see the profitability slowly improving. I think for the airline part, I think based on the sense that recently at IATA AGM, seems like most airlines are quite optimistic that the forward view for the bookings and all that are healthy, even though certain regions are going into recession or slowdown. But aviation this time around seems to be a bit counter-cyclical. So I think, and with the supply side, with the aircraft still having its own supply chain issues, seems like, I don't know, seems like airlines seems to be on a sweet spot where the demand is at a healthy level versus the supply. So I think airlines are happy, we are happy.
Well, that's good to hear. I mean, airlines are I mean, I almost think it's like a once in a lifetime scenario that we had over the last year. You're never going to repeat these conditions, but hopefully things will be better in the post-COVID environment financially than in the pre-COVID environment, even despite the fact that we might not have a continuation of the record profitability for airlines and that we've had. And all the suppliers, of course, are happy because it's easier for the airlines to start paying their bills. But over to Edward to ask the next question. I think we're going to start focusing a bit on manpower supply chain issues.
Yeah, indeed. So, CK, I think a nice segue from you said that airlines may be struggling to get their fleet in from a capacity perspective. So, CK, maybe starting with you, but then also moving on to Arthur and Chandran. How have manpower issues actually affected your ability to recover? And are we still seeing manpower issues in the region which are slowing down the growth? So, CK.
Yep, thanks. I think the last year when we first reopened, officially we reopened last year in April for Singapore, and then we went to summer. And then we saw also worldwide some of the busiest airports running into those issues as well. So I think in Singapore, we did some coordination to make sure that we were checking the various partners within the aviation system, our shops, and more crucially, immigration as well, and the ground handlers. How were they in terms of their staffing level? So I think at last summer, we intentionally depict some of the flights. We explained to the airlines to say that, look, I think we can get by together, but let's do some adjustments. You may not get the slots that you want. Let's depict it because it's the peak that kills the all the other service providers as well. So while they are short, it took some time for a lot of the workers who are, Singapore has very few, has a limited supply of talent here. I think we need to get the workers from the other countries as well. So while they ramp up, in the near term, there was a bit of a crunch. So we work with the partners to say, okay, guys, let's not crash the whole system. Let's depict some of the flights. Let's delay some of the flights so that the service level is acceptable. So I think we managed to pass. We managed to pass. It's not the best performance, but we managed to pass. Then moving forward now, I think although the manpower is almost full to its, I think the ground handling manpower is back to near pre-COVID level. But I think still we lost a whole batch of experienced workers. So I think what we hear is that on the job training, I think people are still not as tip-top as they used to be. So there will be some challenges. But in the longer term, we are working with the partners, including the airlines and Chandran also, to see, I think automation is the key, because Singapore will always be short of workers. And this is a long-term thing. It's not just a cyclical issue. Long-term, we will have challenges. And we are pushing for automation. We have all the self-service kiosks and all that, trying to get more airlines to come on board, because I think the consumers are ready. I think Singapore consumers are quite ready to self-service, self-bag tag, and mobile check-in. They are ready. In fact, they would like to see that among their partners. So I think what we are taking this period now is to work with our airlines to push all the automation. And our other partners like immigration, already the biometric self-check-in is already being rolled out. So I think will keep us busy for a while.
Yeah, thanks, CK. And I was visiting some of your colleagues in Changi last week and was actually quite taken aback by the dramatic increase in visible automation, particularly in the departure areas. And very pleased to be able to enter via a passport scan gate, even though I'm not a Singaporean citizen or PR. So, clearly things have moved on during that post-COVID era. And I think what you mentioned as well about lack of experience with new people coming in. In Europe, last year was horrific. In terms of queues. And I think we were very, very fortunate not to have that experience in Southeast Asia. But one thing I certainly noticed is that staff in Europe were sort of new into the airports and just didn't know what they were doing. So I think that's a great point that you raised there, is the need to recognize that it takes time for people to get really good at their jobs. And if you bring in a new batch, you need to do something to de-peak or compromise in the meantime to make sure that those sorts of horrific European style experiences don't pop up in Southeast Asia. So thankfully, not yet seen. Now, Otto, Thailand, different market, different kind of staffing. What are you seeing there?
We're okay in Thailand, but it's horrible. We're okay in Thailand, but we operate in a global environment, so we're impacted. Our aircraft are impacted. We're impacted when an airport is short-staffed or our plane comes back late. What happened in Europe last year, and that's probably we're going to see signs of that in Asia as well. Maybe to a lesser extent, hopefully. But being a global industry and we operate globally, Thailand's okay, but some other places are not. So we will be impacted, by manpower issues from third parties, and that's just the nature of how things are.
So have you adjusted your scheduling, taking account of potential delays down route, or is it just something you live with on the day?
We say that we're very efficient. It depends on who you ask within the airline, but yes, we have done what we can to minimize that impact. Yeah.
Mm-hmm. Yeah. Okay. Thanks, Otto. And Chandran, again, a very different market, a different set of people that you're working with. What are you seeing in the markets you're operating in?
Yeah, when you talk about manpower, I mean, we have three different segments, right? The first, the crucial portion are the pilots. Since we send the pilots, most of them on long-term leave, we didn't retrench them. very minimal numbers are being retrenched, but then majority of them have taken the long-term leave, hoping, because the good thing is they had trust in us. So to restart back and flying back. So we managed to call them back, and then in a short term of time, they were managed to reinstate it because of the facility that we have, the simulators and so on. So that's quite quick. Second aspect is cabin crew, right? You still need to train them for 45 days if they're fresh. If they are coming back after long-term leave, then it's about 4 weeks or 3 weeks, something like that. That was okay too for us. But the big challenge was the ground handling. You would imagine that in some airports, aircraft just waiting for people to unload bags, load bags, bags doesn't reach to destinations is not because of us, but because of the ground handling companies. But then passengers doesn't see this, right? They blame us. They go all over social media just continuously to whack us, saying that we are very poor in terms of delivering the service. That was a big challenge in early this year. But then the good thing is it's all coming back to normal. We don't see that kind of problem anymore, and we hope that moving forward, that will be a thing of a past.
Okay, thanks very much, Chandran. So very different perspectives. I think good at least to hear that we have enough pilots, which is obviously the most critical thing. They take years and years to train.
Yep.
If there's a shortage there. So Brendan, back to you.
Yeah, we only have about 5 minutes, and we had a few questions from the audience about MRO, and we also wanted to bring up MRO. So I suggest we look at MRO really quickly as the last kind of question here. One of the questions from the audience was about the aging workforce for MROs and the lack of technicians, and also the higher labor costs. And of course, we also have MRO parts issues as well. Both Line Group and Thai Airways have MRO divisions. In fact, the Line Group one is quite large. The Line Group has a large MRO facility in Batam, serving the entire group. And Chandran, first of all, I mean, can you address the MRO issue? How have you been affected by some of the parts and manpower issues on the MRO side, and how do you address this issue of aging workforce and shortage of supplies of maintenance technicians?
If I may say, Brandon, thanks to the group vision that we invested in MRO years back, today we have about 23 bays for our aircraft to go through the heavy checks. We don't really see, in Indonesia especially, we don't really see issues with talents. We do have enough technicians, engineers, and also we supply the engineers from Malaysia to support them, especially on the highly qualified task like NDT, for an example. So things like that, we work very closely within the group. Given that we have presence in Malaysia, Indonesia, Thailand, so we managed to pull our talents together and support the MRO activities in Batam. In a way, I don't know whether I'm right to say we were the only airline, maybe together with other airlines in the region, didn't have much problem with regards to MRO activities during COVID, post-COVID. The proof is we managed to recover aircraft almost 90% at the moment. All our aircraft are flying, so that says it.
Well, what about the last 10%? What are the issues?
Those are coming.
But those are they have a lot of work to do. Some of them might be returned as well, right?
Some of it are partially due to engines going through the shops facilities, because that takes about 45 days to come back. Some parts we don't really have much problem. The supply chains, we have seen a huge improvement over the supply chains. So those are coming as well.
Okay. And Thai Airways has quite a good decent size MRO facility at Damawang, and at one point there were plans to build another maintenance facility at Utapao. I don't think that's happening anymore, at least for now. But what are you seeing on the maintenance side? Are you is there a lot of challenges there and at the moment?
Yes, we're definitely oversubscribed, bringing aircraft into the fleet. So that's one of the big challenges that we have is finding MRO capacity outside of our own, because our own is oversubscribed, bringing the new aircraft in. So that MRO is the big challenge, I think, in the next year and probably next year as well for us, in finding capacity, bringing aircraft in, getting, I was just looking at new aircraft this morning that need C checks, and we're looking at timeframes for early next year. It's very difficult to find. And again, that pushes the price up. It makes things more expensive, and it eats into that profitability that we have. So MRO, I think, is one of the biggest challenges moving forward. Less so the supply chain issues, but MRO is very difficult.
Yeah, okay, that's interesting. Certainly, the fact that this is not going to go away anytime soon is a little bit of a concern, because it'd be harder for airlines to resume that growth if they can't get all their aircraft maintained or reactivated as quickly as they think they can. Well, unfortunately, we're out of time. We have to finish by 3:30, and we still have to do concluding remarks and a brief survey. But I mean, I'd like to thank everyone for participating, both our audience and our panel. I think it's been a really great discussion. We could go on for another hour easily. There's that many issues, but these things have to end at some point. And this project also this also brings to the conclusion this project that's in our study, which started almost a year and a half ago. So I'd like to thank ADB for supporting this study, this project, and this webinar. And over to you, Yedan, for the closing comments.
Yeah, thank you, Brendan, and Edward as well for the presentation, as well as thanks to all the distinguished panelists for such wonderful, insightful discussion. Yeah, particularly on the market outlook part, I personally found it quite helpful. Lastly, I would like to thank all the attendees for all the questions and active participation in this discussion. Hope you found this webinar also helpful to you. I'm very sorry I might not have time to cover all the questions you raised, but please feel free to contact us even after this webinar by email. We're happy to have further communication in this Southeast Asia aviation related topics. So lastly, I would like to launch a few survey questions to all the audience, including the panelists. Please feel free to let us know your thoughts. Well, basically, there are 3 questions, as you can see on the screen. Yeah, firstly, recalling your expected, how you expected the markets. What is the most surprising factor among what we have discussed or demonstrated earlier? Is it airline profiting, or the lagging of Southeast Asia and the Northeast Asia, or is a surging domestic traffic, or is East Asia, Southeast Asia, and Southwest Pacific recovering so fast, or is low cost carrier recovering even slower than the full service carrier? Please, yeah, feel free to let us know your view. The second question would be your expectation about this passenger full recovery. Compared to 2019. Would that be end of this year, sometime next year, or even later? Lastly, we would like to hear your overall experience about this webinar, just for today's webinar, because this is the second webinar.
Yes,
Yeah.
we're gonna let the audience kind of a couple minutes to answer the questions, but just if the 3 panelists have any final remarks, maybe quickly on what do you think the biggest issue is for next year in terms of getting to 100%. Otto kind of mentioned maybe MRO is the biggest issue. What do you think, Chandran? What do you think is the single biggest issue?
The biggest issue will be market, how the market react to the excessive capacity in the region. That could be the biggest thing, because that will impact the overall profitability of the airline.
Okay, and CK, any final thoughts on?
I guess it's also how long aviation can. Now it seems like we are staying a bit decoupled from the recessionary concerns. especially in the Western markets, in US, in Europe. There seems to be all this talk about, like Germany is very technically in recession, right? I think some of the other countries like UK and all that, they are supposed to follow suit. Yet somehow aviation is floating on the air. Seems like we are. If you look at us versus PMI, for example, indicators, seems to be that usually we will slow down, but now it's not the case. So how long will this stay decoupled? It's an interesting question.
And Otto, any other thoughts besides the MRO issue that we were talking about just at the end there?
It'll be interesting to see what happens in Europe and Australia as far as spending goes, and will this demand continue, which I think it will, but nevertheless, yeah.
Okay, great. Back to you then, just to go over the results and close this off.
We have like 46 people responded to the question. The first question, a survey question is, it seems like the airport, some of the airlines reporting profits at the moment is the most surprising to all. And the question regarding the expectation of full recovery, it looks that the most people feel that within the next year or so, 6 to 12 months, we're gonna have this full recovery in Southeast Asia aviation. And lastly, I'm very glad to see that all the participants find this webinar satisfactory to some extent. Well, thank you very much. Thank you all for joining this webinar. Time flies. I'm sorry that due to a time constraint, we can only cover certain topic, but I'm sure this kind of discussion will still continue. Please do feel free to contact ADB for any other question, comments you may have by email, even after this webinar. We will also be sharing this recording and the presentation material later, but please we will notify you by email or the Zoom notification. So we highly appreciate you being here today, and hope to see you again in ADB's future events. Have a good day. Thank you all very much. We'll see you.
Thank you.
Thank you.
Everyone.
Bye.
Thank you. See you.